Hello everyone, and this is our weekly review of the news data events this week, the week starting Monday the 10th of September. Overnight, we had some pretty weak data from China and Japan. Chinese shares were pretty weak on the back of the imports, actually. So the country's imports unexpectedly declined 2.6%. And this also followed hot on the heels of data over the weekend that showed that China's industrial output grew in August, but at the slowest pace since 2009. I think with inflation still remaining relatively high, I think this is rather narrowing the options for China in terms of easing monetary policy, but that's a bit of a dampener on things first thing. But generally, I think following the relatively positive conclusion to the ECB's press statement under the stewardship of Mario Draghi last week, there's been a pretty good positive outcome there, followed hot on the heels, certainly for the dollar anyway, with a pretty poor reading for non-farm payroll on Friday. We mentioned on our workshop last Thursday that anything sub 100,000 would probably almost definitely ensure there is going to be QE3. Although just reading between the lines here, I'm still not 100% convinced, though, although a lot of analysts are. I think best to prepare for both outcomes, whether there's going to be QE3 or not. Which takes me to the data for the rest of the week. This week, it's largely dominated, following a pretty heavy week last week. It's dominated by two events this week. First of all, I'm going to jump straight to Wednesday, which is the ruling by the German Constitutional Court. This is the Constitutional Court in Karlsruhe, and the judges are known as the Crimson Cardinals, dressed in red, and their official robes. And they're basically going to rule on whether the ESM or the ECB's primary market bond monetization program is in fact legal. Obviously, a no vote would just kibosh everything. The question is, what chance is there of a no vote, the court agreeing with the Eurosceptics that it is not legal? I think it's probably sort of 70-30 maybe in favour of a positive outcome. But a negative outcome would be very, very negative. And that's something, obviously, we still need to prepare for, just in case. Interestingly enough, the population has decided, but a margin of 2-1, that the court should say no, which is interesting. In fact, only 25% of the German population believe that the court should dismiss this Eurosceptic appeal. So, politics being what they are, whilst Angela Merkel, German president, may well have a good inkling about what the result is, it's not a particularly popular move, certainly ahead of elections coming up in Germany next year, and I think she'll have one eye on that outcome. So it's not an absolute certainty that the courts will rule that way. And the other big bit of news this week, obviously, is the FOMC. This is the rate-setting committee of the Federal Reserve, the central bank in the US. We know what's been going on there. We've heard lots of feedback from the minutes from the previous meetings. If the numbers are continuing to show the economy struggling, the Fed has stated that they will act to ease monetary policy, which would be to engage in a third bout of quantitative easing, which is known as QE3. And the reasons why the dollar sank quite dramatically on Friday, with dollar-euro, I think, touching 128.15, or euro-dollar, I should say, is because, obviously, with QE3 increase in supply of dollars, that will weaken the dollar. And it's basically largely been discounted already. So it'd be quite interesting if this doesn't happen. Obviously, a lot of that will have to be unwound. What else would they do if they didn't do QE3? I think they'd just extend the period of keeping very low interest rates through to sort of 2014, or maybe further. But it is an issue that is never absolutely certain, and so I think 7:15 on Thursday will be a key time. Other than that, we do have other data, the regular weekly data on employment on Thursday in the States. We've got producer price index also, which is the price of finished goods leaving the factory gates. That's expected to tick up to 1.2%. That's the one thing that could prevent the Fed from engaging in QE3, the fact that its effect is being less and less the more programs they engage, and number two, the fact that inflation is starting to tick up a little bit. Other than that, on Friday we have the other inflation reading, the CPI, which will be more relevant. That's going to remain fairly benign, and retail sales expected to be roughly similar to August levels. So unless we do get a significant change from those predicted numbers, I expect the status quo to remain. That's really it for the rest of the week. We look forward to seeing you again in our workshop on Wednesday. Thanks very much for listening. Bye for now.